What's up, everyone? This is Jack. This is going to be a quick bar-by-bar review for S&P 500 futures contract on August 20th, 2026, Thursday. I want to start with the daily chart. Daily chart has been in a big bull trend. We went sideways for a couple of months, and then we got a big breakout. Week or two ago, we started to go sideways, tested the all-time high, getting a bear breakout right now. And because we started to go sideways up here, not getting any strong bull trend bars, not very good follow through for the bulls. Once we started to get a sell signal here and here, increases the odds that we would get a breakout and a second leg down. And that's what's happening right now. Coming into the day before we saw this bar, just with this on the chart, to me, very likely that we would go below yesterday's low and get down to this bar's low at a minimum and probably test this breakout point and the moving average if possible. It's possible that there are buyers below, but to me, the last 4 trading days have been bear bars. In fact, probably 90% or so of the last week or two have been mostly bearish. That increases the odds that we need to go lower to find the buyers. Maybe we test into these gaps right here. We have a big trading range lasting a lot of bars here. Increases the odds that whatever breakout we get, we'll pull back into this range and test breakout points at a minimum. So I thought that today had a risk of, some sort of bear trending trading range. It's almost the end of the week. Here's the weekly chart. We didn't have good follow through for the prior week. Increases the odds that we pull back and test that breakout point there. Monthly chart, we still have another week or so of the monthly chart. And we're back below the breakout point. We have a weak bull bar. Probably buyers not far below, but we may need to test down into this breakout point. I think that's a little less likely, but it's possible. I mean, this is a pretty strong climax with bad follow through. Increases the odds of profit taking. Probably buyers down here if we do get there. But anyway, let's, I guess I can talk a little bit about the Globex chart. Here's the Globex chart coming into the day, tight range, and then a pretty strong spike and climax bear trend with a pretty good looking bull reversal bar and a doji. Increases the odds that we get a second leg up for the bulls, probably looking to test these swing points. And this is the Globex low. Probably we'll try to get back to this low close or the Globex low, but this is a good looking reversal down, and this is late strength in this bear trend. So it increases the odds that we get a deep pullback and look for a test of the breakout point right here on the Globex chart. So it's the 30-minute Globex chart. Okay, now let's get to the 5-minute chart. Cool, I've got that locked out. Just briefly talk about yesterday. We had pretty strong selling pressure on the open. We tried to get a bull trend, but ultimately it failed and became a bear reversal day that trended sideways to down for most of the day. So we had a bear reversal bar yesterday, increases the odds we go below yesterday's low. Well, no surprise, we're opening below yesterday's low. First bar of the day, a big bull bar, probably a second leg up, but candidate for an opening reversal down. But better to wait. And then bar 2, follow through, but a doji. So I imagine buyers not far below, scaling in lower. But it's possible that we get an opening reversal down, so I would not be buying, and I would be waiting to see what the rest of the opening range looks like. We have a doji sideways, increases the odds of sellers above, disappointing for the bulls. So bulls may sell out here, and bears may begin to sell, looking to scale in higher. Yesterday's low, not far away. Globex low, you can't see it, but it's way down here. And if we do get an opening reversal down, that will probably be a test target for the bears. So Globex high way up here, that'll be a target for the bulls. But big gap down increases the odds of trending trading range behavior. So I imagine the bears will get a breakout soon. Bar 4, weak bear breakout, buyers below, but not good for the bulls. Probably sellers not that far above, and probably buyers not that far below. Trading range open. 5, channeling lower. I imagine the bears will get a test of the low of the day soon, and then bar 6. Bar 6 and 7 is always important because that's 10 a.m. and we have news. Even if there's not news, you should always pretend that there is news. So bar 6 and 7, we're probably going to go lower, probably sellers above. And look at this. We are trapping the bulls buying above bar 5. And that means that when we get back up to this price, those bulls may look to exit their positions and bears will begin to sell. So for that reason, and because of the strength by the bears here, we have 4 consecutive bars down. I would say it increases the odds we go below the low of the day, and it becomes reasonable to sell bar 6 and look to sell a pullback as well. Bar 7, pretty strong close, but a lot of overlap so far today. Increases the odds that we get a pullback into the range of 7, but I imagine we go below the low of the day soon. And then we found buyers down there. So the bears are scalping out below 1 and bulls are buying below 1, looking for a second leg up. And this is a good indication that they'll get it. I don't think that it's a very strong buy the close bar. And I think there were probably sellers at and above the bar, but probably the bulls will get a pullback and a second leg up. Sorry about that. A third leg down for the bears. 1, 2, 3, micro double bottom if we turn up on the next bar, and a possible double bottom with 1. We're near the low of the Globex range from the prior day. That's what this line represents. But the bears are obviously looking to target today's Globex low, which is down here. And if you draw a measured move of the Globex range, we are just below the midpoint of the Globex range. So that's important. I think that the bears, based on the price action and the position of the market relative to the Globex range, I think the bears are stronger. Also because of what I talked about in the Globex session. The bears had a strong trend down, and despite the bulls having good momentum up, they may get a second leg up, but probably will find sellers at these swing points right here that I mentioned earlier, and probably around yesterday's low as well if we get there. 9, probably going lower, but I imagine bears will scalp out. This is the third leg down for the bears. We're probably in a trading range. Increases the odds we find buyers below 8. 10, late strength in a bear trend. I imagine bears will get a second leg down, but they may get a second leg down of this entire piece. So we may start to rally for that reason. And then we have bar 11, pretty strong bar for the bulls. Could be a vacuum test of resistance. Very likely sellers above 10 and sellers above 9. Probably sellers up here as well. And it looks like the market is looking to test that price to let out those trapped bulls. Bulls buy here, maybe buy more below 1. And we're beyond that midpoint now. So now the next target is probably this trap price, if not the high of the day. Bulls may be able to get there if they maintain this momentum, but right now it is not clear if they will be able to maintain this momentum. But right now, probably going sideways to up. Deep pullback, pretty good looking sell signal bar on 12. Disappointing for the bulls for sure, but I imagine bulls will look at this as a pullback and will be buying it and buying below it. Sideways, 2 consecutive bars, not good for the bull case. Probably sellers not far above the 11 high, the 11 close, but I imagine we have to get there to find them. Probably buyers somewhere in this range if we go lower. Then 14, second leg up for the bulls. Could be a sneaky wedge, as I like to call it, sneaky wedge. Not a very good one. We have a lower low here, so it's not that great. I imagine bulls get a second leg up from here, but probably sellers not far above these highs, scaling in higher. The problem for the bulls, anytime you get bad follow through like this, I kind of think of it as like the market maker being a business person with inventory, and they're trying to liquidate their inventory, and they're getting a lot of sellers, and that's great. I mean, if we got a lot of sellers, let's raise the price so that we can sell at a higher price, right? And so we go higher, and then we kind of trickle sideways to down. We go higher, and we might trickle sideways to down. And then, that happens enough times. That's why wedges work. And, that's why you get 3 or 4 pushes up, and you often get a bigger reversal because everybody sees the pattern. They're like, oh, okay, I'm just going to start selling. We're obviously going to go sideways to down. So anyway, second leg up, 14 likely, but probably sideways here. And then follow through. I imagine bulls get the breakout. Probably buyers not far below. But, are we always in long or always in short? To me, temporarily always in long, but overall, I think we're always in short because of the behavior here and the position of the market. We're trying to turn down from these swing points. I imagine we go sideways to up, sideways to down. Eventually, we're going to go sideways to down, all the way down to a new low of the day, because I think overall the market is not as bullish as it is bearish. But the bulls might get another push up here. Not a good idea to be selling, but probably it will be all right to sell soon. Letting the bulls out who bought the close of 15, but still not very strong sell signals to me. It's possible that the bulls get another push up before we get the bear breakout, but we're turning down from not only these swing points, but also around the moving average here. So, that's characteristic of bear trends. So maybe sideways to up, but I imagine at some point we'll get back down to the 10 close, the 11 low. Buyers below, and bar 18, pretty good looking buy signal bar, micro double top maybe, but probably we'll have to go higher to find the sellers. And then bar 19. 19 is a special bar. It is a breakout with very low overlap compared to everything else today so far. It's also the third push up, at least. It might be the fourth push if you count that one. For that reason, the bulls need to do more. We are above the high of the day right here, and we're closing not that far above it. And that makes me wonder, how trapped are the bears? If you're a bear and you sold down here and sold more up here, or maybe sold more up there, your cost average is, right about here. And if you look at this bar and think we might pull back, it's pretty reasonable to expect a pullback to get to this place. So for that reason, the bulls need to get a strong follow-through bar to trap the sellers and make them think that we're not going to get back to this midpoint. And in fact, they're going to have to buy back their shorts, and that will create a second leg up for the bulls. But right here, special bar, we need follow-through, and we didn't get it. Look at this. Bar 20, everybody and their mother sold the close of bar 19. We have a big bear climax bar. You could argue possibly buyers below. We have trapped bears selling here, but as I just said, they're not all that trapped. If they sold down here and sold more up there, their stop is probably way up here, and they're actually happy right now. And with this much momentum in the market for the bears, and all of the overlap and bad follow through for the bulls and good follow through for the bears here, I imagine that 20 will get a measured move down. We'll probably test the low of the day, and we're looking for the Globex low, but it might take hours to get there. But probably reasonable to think of the market as always in short, reasonable to sell here, despite this bar being 15 points with big risk. It's reasonable to sell here, sell more on a pullback, and then look for a test down here over the next hour or so. Reversal up, bad follow through. This trade might fail, but I think the bulls need to close the gap. We have buyers at the close of 19 and probably buyers below 19. It's a strong enough bar to warrant that. And we have a small gap right there. If that gap closes, that'll weaken the case for the bears and increase the probability that we're going to go mostly sideways, possibly sideways to up. But right now we have a gap, and this could be part of a pullback for 20. Sideways, still a small gap. And again, turning down from the moving average, characteristic of bear trends, but a sideways bar. Probably sellers above, scaling in higher. Probably there are sellers at and above 20, and I imagine we're going to test the 21 low soon. 23, bear breakout, probably a second leg down, and sellers above. Tight trading range, 24, overlapping the last 4 bars. I imagine sellers here and above, bulls, maybe a micro double bottom, maybe a double bottom here. But to me, it looks like we're only going higher to find sellers. 25, third push down, little wedge for the bears, but I imagine sellers still at and above 25, and then second leg down, immediate follow through 26. This could be a reset for the market cycle. This might be, resetting things. We have 1, 2, 3, new breakout. It's also an overshoot, so it could fail. I imagine we're going to head down here, probably to bounce. You know what? I think I am missing a line on my chart. Give me 1 second. There's a very critical line on this chart today, and I just had to redraw it. It's this one right here. I talked about the daily chart, this breakout point being tested. Well, that was tested today, and that's a very important price, because if you think about it, we're in a permanent bull trend. If you zoom out, the market's in a permanent bull trend. It has periods where it does this, but look at what it does after it does that. Okay, so this is a permanent bull trend that we're in for all of until society completely changes, till human behavior changes, we're in a permanent bull trend. So when you get a strong breakout like this in a bull trend, there's going to be buyers on every pullback that you have. We pulled back right here, big gap up. We're breaking out below here. We're testing a prior breakout point. We're going to find buyers, and those buyers are going to be institutional buyers. So if you think about it, if we got institutional buyers at that breakout point, that's right here. That's this level right here. I didn't have it drawn earlier, but look at what happened on 8. We tested that price, reversed up. We broke below it on 10, reversed up very strongly. To me, everybody and their mom put together cannot create bar 11. That is institutions creating that bar. And if institutions are watching that breakout point and buying aggressively every time we get there, what do you think is going to happen now that we're back below it again on 26? The answer is probably we're going to find buyers and reverse up. So while this is good for the bears and overall the price structure today looks pretty bearish, and I think that we're going mostly sideways to down, I would not be holding short much below the low of the day for this reason, because clearly it's an important price level. We're also around a big round number. I think this price level is more important than that big round number. It's also slightly different on the full size contract. This is the micro contract that I'm looking at. On the full size contract, I think this price level is actually down here. But I trade the micros. I look at both during the day. And you know what? I can show you the full size contract real quick. Because I like to keep both up just in case there are differences. So, okay, it's a little bit different, but not that different. This is the bar that we're on currently. So we're closing just above it right there. Anyways, this is going to end up being a long bar by bar. On my chart, we're getting below this line. Once we get below 11, very likely to find buyers reverse up. It's also 3 pushes down, but I imagine there are sellers above 26, above 25, so it's probably reasonable to be short. Follow through, I imagine we go a little bit lower, but we're starting to stall and run out of momentum down here. And then we get a bull bar, 28. Now, this is not enough to reverse this trend. In fact, this might be a reset. We might get a second leg down from that. And I think that's pretty probable. So it's okay to think about selling here and above. Bulls getting a reversal up. I imagine we retest the lows pretty soon and start to go sideways. Doji, probably sellers above, maybe buyers below, but they need a wide stop. We're probably always in short. I would not be buying here. And then two-legged rally, two-legged pullback in a bear trend and a sell signal bar. Reasonable to sell here. Sell more on a pullback possibly, but we could be going mostly sideways here. We also have a big double bottom right here and a trending trading range day. So we do not have to go that far below 28. Also, if you look at my stats up here, at this point in the day, we've already traveled about 3/4 of an average day's range. So the market doesn't really need to do all that much more. We could go mostly sideways like this all day. So it's dangerous to be selling here, but reasonable. Reversal up 32, 1, 2, maybe 3 pushes up, counter trend. Reasonable to think about selling above 32 and above 31. Bear bar, maybe sell the close, but the problem for the bears is a tight trading range for the last half hour or so, and we're near the low of the day on a trading range day. So not all that great of a sell, but reasonable. And then small reversal bar for the bulls increases the odds that we go sideways to up right here, but more likely sellers scaling in higher. And then bull bar, to me, a little bit of a surprise. Bulls might get a second leg up here, and then a pullback on 36. Tight trading range, whatever breakout we get, up or down, likely to pull back into this range after a few bars. And then we try to go lower. We double bottom with 34, reversed up. Pretty strong buy signal bar, but to me, a little bit of a sucker's buy. Because like I just said, probably we're going to break out and then test back into this range. In fact, we might even break out to the downside if we break out to the upside first. But if the bulls are surprisingly strong, they could easily trap the sellers who are selling the close of bar 37 and selling more above it. We also have trapped buyers right here on the stop entry. So maybe we get to that price and find sellers. Small follow-through bar. Why is it small? Why isn't it bigger and stronger? And then more follow-through here. And we have a small gap up on the open of this bar, that's aggressive buying. But the problem for the bulls is that this is a trading range day. We're creating a new gap. They may be targeting the gap right here. We still have a small gap right here for the bears that is open. So we may look to test into that range. And that's reasonable. Buying the close, buying more on the pullback. Maybe we get up here. It's just this tight trading range is going to be like a magnet. And also, this is an important price. You know, we do, every time we get below it, we rally aggressively. Here, we didn't rally aggressively until right here. So that makes me think this might be a vacuum. We might be trying to let out the trapped bulls up here. And in reality, I think the bears may be stronger than the bulls. But think about it from the market maker's perspective. If you have a lot of inventory to sell, you want to sell at a higher price. You don't want to just drive the price lower if you could drive the price higher and sell it. So to me, I would not be buying this. I would be waiting to see what the reversal and the pullback looks like before I think about buying. It's possible we're always in long, but to me, it is not clearly always in long. And then we get this reversal bar with a strong close on bar 40. To me, this kind of really kills it a bit for the bulls. They need to buy the close aggressively and buy below 40 and put a bull bar on the chart in my mind. Otherwise, if we get consecutive bear bars here, I'm going to think that this rally might be failing. And with that, we did not even reach the high close on the pullback from 40. So to me, this is sell the close, sell the pullback, maybe. I mean, we have a small tail, small bar here, but the context is reasonable. We're probably going back down into this range, back down to this price level. And if we do it with strength, we might even get to a new low of the day. So that's the risk for the bulls. The risk for the bears is that the bulls are stronger than they expect, and we may be going up here to relieve these trapped traders. And we may be testing support right here. All of these highs are breakout points from the tight trading range, and you can see that there were aggressive buyers right here. But to me, the bulls need to do more. They need to buy the close and buy more above 42 and get up here to make me think that we're clearly always in long. Otherwise, bears are going to sell 42 thinking that it's a pullback, and that's what's happening with 43. We might have a small wedge bull flag right here at support. That's reasonable, but I don't know. I don't think the context is that good. I think that this is turning out to be a climax, and we're trending lower. I think we're looking to test the low of 36, 37, 28, new low of the day. And then 44, I think the bulls are giving up right here. Reasonable to sell the close, sell more in a pullback. We're probably always in short. And then more follow through, 45, 46. Big climax. Any bulls that were buying here probably had their stops right here. So it makes sense that once they realize that it's not going to work, they just start dumping their longs, and that drives the market lower. Probably always in short. It's a second or third big leg down from this. But it's clearly a reset to me, so reasonable to sell here, sell more in a pullback. Even here, above the midpoint in 46, reasonable to sell. Probably okay to take profits below that or look to sell and sell more higher. And then we start to get channeling bars down to the Globex low. I imagine we bounce at the low, but probably sellers above any of these highs realistically. Bull bar, but sellers probably not far above 52. Probably a second leg up, so reasonable to sell here, sell more higher. Probably we retest the lows soon. And then 54, bulls might be able to catch a higher low here. We might get a couple legs up to 47 area, but I imagine that we are sideways to down for most of the day here. Late strength, climactic bars will attract profit taking, so probably reasonable to close your shorts soon, but probably still reasonable to bet on another leg down. We have one, maybe two or three legs down here, probably sellers around this breakout point. Pretty good looking reversal up. I would not sell here, but I'd be interested in selling up here. And then not a very good low one, probably bulls get a second leg up. Drifting sideways to down. Again, I think bulls get a second leg up here, but bears are clearly strong. I don't know. I think that we need to test up to here before we get much more down. And then micro double bottom, probably going up here, but probably just to find sellers. This looks like trading range pullback behavior. And then 66 looks like we'll be mostly sideways into the close, but probably sideways to down overall. Another double bottom and a good entry bar, but I imagine sellers not far above. Outside down 70, probably profit taking around these lows, but we'll probably have to get there to find it. Pullback, maybe we go higher, but it's probably going to be sold. And then 73, breakout pullback, probably sellers not far above. And then just look at the last couple hours, we're totally sideways. New low of the day, maybe we go a little bit lower, probably profit taking soon, and then, you know, pretty much too late to do anything here. Looks like we're drifting sideways to down. And that's the day. So overall, the day was a bear trending trading range day. I don't think I would call it a bear reversal day because to me, on the open, the market was predominantly in a bear trend, and it was not clearly ever in a bull trend. For that reason, I would not call it a bear reversal day, because on bear reversal days, the premise there is that the day begins as a bullish trending trading range day at a minimum, and then the bears overpower the bulls and create a lasting reversal. To me, bearish from the jump, despite the rally on the open. So anyway, that's pretty much it. My trades today, not all that impressive, not much to talk about. What did I do? I didn't do very much. Let's see. I think I sold, where did I sell? I think I sold somewhere in here. I might have sold 8 or 9 and then got out here. I think I did that. And then oh, you know what? That's not true. I did not do that. I thought about doing that, but I did not. Because the risk was that we would test back up to here before we got back down to the 8 low. And I did not sell. But I did sell. I think my first trade was selling the breakout on 20. I think it was pretty clear that the 3 legs up would lead to, you know, a second leg down. So I sold here, scalped out. I didn't get the pullback because I wanted to enter at the breakout point for the pullback. And then I think I sold above 24, got out here. I sold in here. I sold in there, and then I got out here. I didn't really do much. But I did work on my entries, and my entries were better today. And I did pretty all right. Overall, things have been going pretty good. But yeah, I just got to work on context and keeping it objective, keeping it simple, and sticking to my system. So doing all right overall. Anyway, hope you enjoyed the bar by bar. And let me know if you enjoyed it. Let me know where you're at with your trading, how things have been going. And I'll talk to you next time. Thanks. Love you. Bye.